By when we're into the third and fourth quarter, we're going to have the United States, China, Japan, and the EU all printing money, all providing financial accommodation because, they need to safeguard the value of their government bonds. They need to make good on the promises to their electorate. And you have sort of this reorganization of the global finance and trade ecosystem initiated by Trump, but now everyone else has to react. And what the reaction is, I'm going to print money and make it okay for you. Don't worry. That's what the political answer is to Trump's tariffs, I believe. And therefore, by the end of the year, we're going to be swimming in fiat liquidity. And Bitcoin at 250,000, we might even be higher if we get the sort of gusher of liquidity out of the major trading blocks that I expect.
The global financial system is gearing up for what could be its wildest ride in years. As trade wars heat up and economies start feeling the pressure, central banks are about to hit the panic button, and by late 2025, we might see the US, China, Japan, and Europe all firing up their money printers at the same time. It's shaping up to be the ultimate hold my beer moment for fiat currencies, and Bitcoin could be the big winner when all this liquidity comes flooding into the system. Arthur Hayes has been watching this playbook unfold and thinks we're heading for a perfect storm. He sees Trump's tariffs forcing everyone's hand, with central banks inevitably turning to the old money printing playbook to keep their economies afloat and voters happy. The result? A tidal wave of fresh cash that could send Bitcoin rocketing toward crazy numbers like $250,000 before we know it. This isn't just another boring inflation hedge story anymore. What we're really looking at is a complete reshuffling of the global financial deck, where Bitcoin starts acting like the neutral referee in a world where every country is trying to outprint the others. While politicians keep pretending they've got everything under control, the smart money is already placing bets on what happens when this coordinated money printing frenzy kicks off. One thing's for sure, it's going to be one hell of a show, and Bitcoin might just be the last one standing when the music stops. Let's watch clips from Arthur Hayes' explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Point is, as the Federal Reserve Chairman, yes, supposedly you're this, steward of the American dollar, keep inflation low, unemployment low, those sorts of things. But in reality, you're another arm of the government, and the government needs to get funded at an affordable price. And therefore, you will do what is needed as the Federal Reserve Chairman to make sure that happens. And I pointed out a very seminal speech by former Fed chairperson Arthur Burns from 1979 that he gave in Yugoslavia called The Anguish of Central Banking. And if you read that speech and you think about the issues that people are concerned about today within America and the world economy, you'd say, wow, it looks kind of like the same thing. And his point essentially was that the politicians and the government and the populace have adopted this stance that the government can solve all your problems. The only way government solves problems is spending money. And therefore, you embed an inflationary impulse into the bedrock of the democratic society like America. And therefore, as a Federal Reserve Chairman, while you might believe that you should be squelching inflation or tightening the monetary conditions sufficiently to eradicate inflation, what you really need to do is make sure that the people get the policies that they voted for, which is inflation, essentially, if you want the government to have all these sorts of programs. And back in the 70s, it was New Deal era, grand society type things. Today, it's woke, inclusion, DEI, all those sorts of stuff, right? Same thing, different nomenclature. And so Arthur Burns is saying, yes, I was a Fed chairperson. At any point, I could have stopped inflation, but I couldn't because my job really was to make sure that the government was funded. Now, Powell is in the same sort of situation here, right? What he should be doing is tightening monetary supply. The U.S. economy is growing very well. Stocks are down 10%, 15%, whatever, but they're at all-time highs. Record wealth for those who own financial assets. Unemployment's at 4% record all-time lows. Why is he reducing the pace of quantitative tightening? Why did he cut rates in September and December of last year? He didn't need to. The U.S. economy is perfectly fine. Real GDP growth is growing above trend. But he did it because there's a $36 trillion pile of debt that's growing exponentially. The interest cost on that debt is growing exponentially. And the main inelastic buyers, China, Japan, Germany, these exporters that Trump has basically said, take your things and go home or build your factory in America. Therefore, you don't earn any more dollars. Therefore, you can't buy any more treasuries. then if they're not buying, then the Fed or the banks have to buy. And so Powell, he said his piece. He tried to be Paul Volcker or, the modern day equivalent. But in reality, he's just another government hack and he needs to print the money. And he basically said that at his last press conference. I'm reducing QT. Why reducing QT? Economy is fine. I might do QE for treasuries, let the mortgage-backed securities run off, take the proceeds, buy treasuries. And then he stated that when asked, my base case is tariffs, inflationary impact is transitory. The fact that he even used that word is hilarious. He got so torched the last time he used that in 2022 when inflation spiked in a transitory manner to 40-year highs. However, that just tells you that his bias is easing. His bias is let's provide money to the treasury market so that Besson and Trump, or whoever is in charge, can do the policy that they want to do. And I know people think that Trump is trying to sort of do austerity, but his plan is from a 7% deficit to a 3% deficit. His plan is not to go to a surplus. His plan is not to, on a net basis, retire treasury debt. He's going to inflate it away by growing nominal GDP growth faster than the rate at the deficit. Yes. However, this is not a Argentinian style Javier Milei. I'm going to have GDP crash by 4 or 5% because I'm removing this credit from the system. So I think, again, money is being printed. It will be printed. Powell told you it's going to be printed at the last press conference. He says tariffs are transitory. I know Bitcoin has done pretty poorly alongside the NASDAQ and the S&P and a lot of other global stock indices. But I think that's just, investors not really appreciating that this is a fiat liquidity bonanza that's about to happen. I think Bitcoin will decouple from these and stock indices and trade alongside gold and really reflate higher as the money supply globally goes higher.
Yeah, so I did also see in that same newsletter, you said if I had to place a bet on whether I thought Bitcoin would hit 76,500 or 110,000 first, I would bet on the latter. So how are you coming up with these numbers? And I know you wrote that before Liberation Day. So do you still hold that opinion?
Yes, I still hold that opinion. So 76,500, that's the low that we reached in March. The local low after we broke through 70,000 in November of last year. 110,000, that's the new all-time high that we reached on January 20th, right as Trump was being inaugurated. And so I think that we take out that next all-time high and Bitcoin continues to do very, very well. The stock market, who knows, right? I don't really do stonks. It's hard. Company earnings, evaluations, and all that kind of shit, right? All I focus on is global liquidity. I know that Bitcoin performs very, very well in a deflationary bust, which is what could happen in this situation, and that the monetary authorities in the United States and the rest of the world will provide financial accommodation to make sure the governments get funded.
Let's be blunt here. The Fed isn't some inflation-fighting hero. Its real job is keeping the government's spending spree alive. Arthur Burns admitted it in 1979, and today's no different. With $36 trillion in debt and big treasury buyers fleeing, Powell's already hinting at more money printing. Bitcoin? It's set to detach from stocks and rocket as this liquidity flood hits. Hayes bets $110,000 comes before $76,500. When central banks choose printers over prudence, crypto wins. Game on. Governments amassing Bitcoin sounds bullish until they decide to dump it. Political winds shift fast, and state-held Bitcoin creates constant sell pressure fears. Meanwhile, Trump's strategic reserve talk is empty without money printing. No politician will choose crypto over social spending. On the flip side, Ethereum is primed for a comeback as the market's most hated asset, while Solana struggles without its meme coin hype. Lesson? Don't bet on state Bitcoin buys. Volatility and rotation into undervalued alts will drive the next cycle. Let's watch more clips from the interview.
No, you're not a fan of the strategic Bitcoin reserve. Why not?
So I think anytime a government holds something, they can sell it. So everyone always freaks out about XYZ government holds so much Bitcoin. Are they going to sell it? They're not going to sell it. They're going to market order, dump it. Are they going to do, how are they going to do these things? So if people support governments globally amassing these stockpiles of Bitcoin, when the politics change, and the politics always change, can't really predict these things. Then from euphoria, we're going to switch to fear of what's going to happen. When are they going to dump these things? So why, if we know this is going to happen, why are we advocating for this policy? And then I think the second thing is not that I I don't like it. It's more, I think people are unrealistic. What people think in their minds is, oh, the government's going to issue some bonds, print some money, and then they're going to go and they're going to buy crypto and put it on their balance sheet, because most of the major governments in the world are deficit countries, or the largest ones in the United States that people are always looking at. It's a deficit country. They have to print something to buy Bitcoin. It's not like they have a bunch of savings that they're going to buy Bitcoin. But even still, even if you have a bunch of savings, there's lots of people in your country that are probably poor, or there's some societal problems that you could be fixing. And what you're saying is, no, we're not going to do that. We're going to buy some Bitcoin and some crypto. Now, of course, I love Bitcoin, I love crypto, but I just don't see the political optics of that being very palatable to a lot of people. So, this bunch of crypto bros are going to get rich because you bought their bags, and you've got, the poor person over here suffering, and that money could have gone to some sort of enhanced government program. I just don't think that's very smart politics. And at the end of the day, I think people are being a bit delusional as to what's going to happen. Yes, maybe if a government had already seized Bitcoin, like the United States has 200,000 Bitcoin that they seized from other people, and they say they're not going to sell it while Trump was in office, or the Republicans, or whatever, fine, I get that. But notice what Trump said, in a budget neutral fashion. So he isn't even going to print money and basically buy Bitcoin. So I'm not sure what people are really getting all excited about. I think people need to think a little bit more about, if you were a politician, was this what you really would do if you had the money printer, or if you had a pile of savings to do something with? So I think at the end of the day, apart from that one chart of rectifying global trade imbalances, Trump and Besson and his cabinet need to reduce the value of the dollar globally. They need to value massively. And I think they will at some point. And you can do it versus gold, or I think you can do it versus Bitcoin. You could do it versus both. But at the end of the day, I think if they're going to be revamping the global trade system, then the U.S. Treasury is not going to be the reserve asset anymore. It's going to be gold. I would love to be Bitcoin, but most likely it'll be gold. And at that point, you essentially need to value the stock of treasuries versus the new neutral reserve asset. And so I propose a scheme by which you could essentially bid up the price of Bitcoin in dollars by saying, I'm going to issue fiat bonds and buy Bitcoin for people at very, very high prices, and devalue the stock of treasury debt, and sort of create a new global trading architecture centered around imbalances being settled in Bitcoin. So I guess the best way to think about it is, if you have a fresh unit of fiat of capital, what do you do with it? Do you buy Solana, or do you buy ETH? Right now, given all the things that are happening. And so I would say ETH from a risk reward perspective is better, more because it's as hated as you say. Whenever you have a turn in the cycle, you want to own the most hated thing because that's going to perform the best. And you don't want to own the most loved thing from the previous cycle because that's going to perform the worst. That's not to say that Solana is not going to go up a lot, but relative to something else, is it going to perform as well? And so I think ETH has sort of the market fundamentals to do very well in this next leg up, because people hate it so much. And so, if it starts rising a lot in price, then you start getting on the, oh no, ETH's back, right? And everyone forgets all the things the reason why they hated ETH in the previous cycle, and then they jump on the bandwagon. In the similar way that NFTs did very well in 2021, ETH is the home of digital art, right? That was the narrative back in the day. That's why I need to own ETH. There's so much activity in NFTs, so I need to own ETH, right? And NFT volumes still haven't recovered to where they were in 2021, even though we're much higher in terms of a global crypto market cap today. That's not to say NFTs are dead. It's just certain things did well. Most things, went to zero or near zero. Similar with meme coins. There will be some things that survive. Most of them will not. And the fervor around trading these things is going to shift to something else. Now, if that is located on Solana, then great. Then Solana can do very, very well. But if that fervor is not located on Solana, then what is the thing that's driving these transaction volumes on a marginal basis that's different from where it was previously? That's the question. And obviously, I don't know the answer to that. We'll see how the future plays out. But I think that's a big impediment for Solana retaking, a 280 or 300, whatever that number was at the all-time high earlier this year.
The Bitcoin mining industry is riding high as top firms extracted nearly $800 million worth of Bitcoin in Q1 2025. With Bitcoin prices stabilizing near record highs, around 81,600, mining operations are scaling up production and efficiency. Marathon Digital led the charge with 2,285 Bitcoin, 186 million, showcasing the sector's growing profitability even as the next halving approaches. This mining boom coincides with a pivotal macroeconomic shift. As central banks globally signal impending rate cuts, Bitcoin's appeal as an inflation hedge grows stronger. The mining sector's expansion mirrors the market's anticipation of what some analysts predict could be a historic liquidity surge. Arthur Hayes has notably argued that such monetary policy shifts could propel Bitcoin to new highs, making miners' current infrastructure investments particularly strategic. The industry's expansion reflects deeper trends in Bitcoin adoption. Hut 8 partnership with the Trump family on their American Bitcoin mining venture demonstrates crypto's growing political acceptance. Meanwhile, Marathon's 17% monthly production increase shows how public miners are optimizing operations ahead of anticipated price appreciation. With mining difficulty at all-time highs and institutional interest growing, these Q1 results suggest miners are positioning for what could be Bitcoin's most explosive cycle yet. As macroeconomic uncertainty drives demand for hard assets, Bitcoin mining has transformed from a niche operation into a cornerstone of the new digital economy, one that's now producing nearly $1 billion in quarterly value. As we wrap up, do you believe Bitcoin will become the ultimate winner in the fiat money printing era? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.